How's it going, everyone? It's Sam. Today I am talking about a new way of thinking that I think can make you a good amount of money, and I'm going to go through some stocks that I think might be promising and that can take advantage of everything that's going on in the market right now. So you should definitely stay until the end because these might be stocks that you're interested in investing in. I did find one stock that is very large and a really good company, stable company that is invested in these kinds of clippers and owns a business that runs these kind of clippers. And even if you don't invest in them, you can still get free stocks from WeBull below. They have a new promotion where you can get 9 free stocks if you refer 3 different people. So a really good option there if you have a boyfriend or girlfriend and then 2 parents. And you can get over $100 worth of stock. So I was getting my hair cut the other day with this wall hair clipper. And I was thinking about what a great investment it was. So I spent maybe $20 on it with all the different attachments. And usually I have to spend about $20 on a haircut. So after the first time that I used it, it was a great value. I bought it about a year ago, so I've gotten about 5 or so haircuts since then. And my dad's gotten a couple too that he's used since quarantine. And I've done a video about this before, but it didn't really appeal to the masses because it was such a small amount of money, I think. So this is a great return. Let's say it costs $20 and we've gotten $150 worth of value out of it. That's a huge return, hundreds of percent. But for the masses, that's not scalable. You can't invest in that to a larger amount and really get anything out of it. And for some people, it's just not worth the time. So then I started to think, well, how else could people profit from it, right? I thought about how a lot of people are stuck at home right now. A lot of people are buying these, and I had previously tried to look, and I was joking with my brother-in-law the other day that we should look at investing into these wall clippers, and I was joking around, but today I started thinking about it, and I thought, I think I tried to look a couple weeks ago, and I couldn't find it. I really just gave it the old college try. I typed in wall stock, and I couldn't find it. So I started to look at other kind of clippers and other kind of companies today. So I want to go through that and talk about how that might be a really good solution for a safe investment that is going to grow because of everything that's going on in the market right now. So I will say ahead of time, I haven't necessarily gone through all these stocks completely. These aren't stocks that I'm invested in. I'm not a financial advisor or a professional analyst, but I am an investor, and this is kind of my thought process. So I started to look for these types of stocks that would be in the clipper space, right? So I had no other way to finding it. I tried looking up clipper stocks or hair clipper stocks. I couldn't find it. So what I started to look up was best hair clippers, right? So I'm going through this article, Oster, I can't find it. I tried to look through I couldn't find Well. I think it's a private company. It's out of Chicago, and I looked them up. I couldn't really find whether they're private or public, so I just assumed they're private. I look up Remington, and this is where things get a little bit more interesting, right? So I find out that Remington is part of the Spectrum Brands holding. So they are a public company. They're owned by a public company. If we look at their key data, it will tell us the overview of the company. So they are operated as a branded consumer products company worldwide. If we skip down, they have lock sets and door hardware. They have plumbing products. They have home and personal care products, which includes Black & Decker, which I've heard of, Toastmaster, Juice Man, Farberware, Breadman brands, and Remington and Lumabella. So I have only heard of Black & Decker and Remington, but it's interesting to look through this. They were offered publicly back in 2018, and since then their prices just dropped. So I wasn't feeling too good about this. The stock has gone up significantly since it was down. If you look at the 1 month, I think it will show it. So it was at about $35. It's up to $41, so it's gone up 20% or so. Before that, it was down to $24 even, so it's been down a lot. It came back. We probably missed it already. It's trading at forward PE of about 14. So I want to dive in a little bit deeper. So I go to the financials and I want to look at their balance sheet, their income, and some of that just to get a general feeling for the company. So I do this before I even look at articles or anything like that. So they have pretty good total revenues because this is a company with a market cap of about 1.8 billion and they're bringing in about 3.8 billion. Now, this is their gross profit. So after the cost of their products, cost of revenues, they have about 1.3 billion left. So that's pretty good. So I take a look at their net income here, and it is actually negative. So as you can see here, it's negative 36 million in December 2019. So not great. Now, if you look at the rest of their quarters, they were really positive here for that quarter back in March 2019. So that actually brought them positive for the year, but every other quarter they were negative there. So that strikes me a little bit odd. So I go over to their balance sheet. They do have a good number of short-term investments, right? So they have about 460 million right now, and their market cap's about 1.8 billion. So they have a significant amount, about 25% in cash, and they have a total receivables of about 552. So they have almost $1 billion coming their way and in cash. However, they have some high current liabilities of about 706 million. So that is a good amount that they have to pay right now. And they also have total liabilities of around 4 billion. So it seems like they're pretty leveraged. And I want to look at their dividends, see how they're paying. They are paying a 4% dividend, and they're paying about 60% out. Now, they just started their dividend recently, so it's not really tested. So after looking at Spectrum, I think there's potential here, but I'm not really comfortable with Spectrum Brands holdings. So I want to look into some other stocks. So I kept on looking through this list. I came across this clipper down here, and I have to find it again. But I come across Braun. So this intrigued me because I have this Gillette razor here. And I started thinking, are they owned by Gillette? So before I go any further, if you guys don't mind subscribing and hitting the like button, I got a lot of likes on the last couple of videos, and I've gotten a lot of new subscribers. For every new subscriber, I'm investing $5, and it really does help me out. It helps out the channel. So I appreciate it, and I'll let you get back to the video. So I look them up, and they are owned by Gillette. So I look up Gillette, and they are owned by Procter Gamble. So I have heard of Procter Gamble. They are a huge company. They have a market cap of almost 300 billion. And they are a consumer staples company. They have a PE ratio that's pretty high, honestly. So they have a PE ratio of about 23, which is more than most of the companies that I want to invest in. That means every $23 you invest in it, they will make about $1. So if we look at what Procter & Gamble does, so they provide consumer packaged goods to consumers in North America, Latin America, Europe, and basically everywhere. So they operate in 5 main segments. It says from beauty, grooming, healthcare, fabric and home, and baby, feminine, and family care. So they own a lot of products that you've probably heard of: Head and Shoulders, Herbal Essences, Pantene, Rejoice, Olay, Old Spice, Safeguard, Secret Brands, SK2, and they also own Gillette, Braun, and Venus products. They also have some products in toothbrushes, toothpaste, oral products, gastrointestinal, rapid diagnosis, on and on, pain relief, personal care products. They own Crest, Oral-B, Pepto-Bismol, Vicks. They also include Ariel, Downy, Gain, Tide, Cascade, Dawn, Fairy, Febreze, Mr. Clean, Swiffer. They own a ton of different stuff. Pampers, Loves. They own essentially a ton of different products in these kinds of spaces. And the reason I think their stock is so expensive right now and why it's kept its value so well is because people are looking at ways to invest in a safe product, a safe stock, and they can't really see a world where all these different products get used less and less over time. So these are consumer products that people really like. They're things that people aren't going to go without. You're not going to suddenly go without shampoo for a couple months or go without your favorite laundry detergent or something like that. So I think people are looking for a safe way to invest, and these are just things that humans have grown accustomed to, and it's just something that even in a recession, people are still going to buy. So I think that's why so many people are flocking to the stock, but that will give you some background for whether you want to invest in it. I took a little bit of a deeper look in it, and they do pay dividends. Procter Gamble is a huge company, very safe and secure as far as companies go, and they yield about 2.7%. They have a payout ratio of about 64%. They've been growing this consistently, and they've been growing it for 63 years. So they have been consistently paying out their shareholders. They have a really nice dividend growth history here, as you can see. And if we look at the dividend safety here, this will tell us the payout ratio, and it has been going down recently. So it is something that is a much safer play than these other smaller competitors, and they're really safe. They've bumped off the bottom here. They were down to $94 on their 52-week low, but they're not really trading at any kind of a discount from what they were a year ago. And when you look several years ago, they were trading much lower, down in 68. But this isn't necessarily a bad thing. This just means that they're growing and there's a lot of confidence in the stock right now. So that is kind of where I went from looking at something that I thought was a good value, pushing it and thinking about how people might be able to take advantage of it now. And now that a lot of people are doing their haircuts at home, I think a lot of people will realize it's not as hard as I thought. And compared to going out and trying to make an appointment with a hairstylist, sitting down and first of all driving over there and then sitting down and then paying and then getting back, it's probably like an hour to an hour and a half long process, and it costs $20, $30, $40. So I think that a lot of people will go back to just using these hair clippers because it's much cheaper, it's faster, they can get pretty much as good a haircut, and it's just kind of fun. I mean, you're sitting around just having someone cut your hair. It's not that big a deal. So I think that some people, especially people that maybe aren't making a ton of money, so anyone maybe 100 grand or less, will probably stick to that because that's a really easy way of saving yourself 20 bucks every month, especially for guys who maybe get their hair cut every 3 weeks because they like it shorter. It's really easy to cut short hair with these clippers. So I think that that is maybe something to look at if you're looking for a safer stock to invest in, something that can take advantage of this market right now. And just do your own research. Again, I haven't concluded anything from this. I haven't invested in these besides just through index funds. But Procter Gamble is a huge company. They are pretty safe as far as companies go. And you should definitely take a look at it and see if that's something that you're willing to do and willing to invest in. Anyways, guys, I appreciate you guys watching. Hopefully this was constructive and something that you can take something away from. I appreciate it, and I will see you in the next one. Bye.